Well, hi folks, Stratman from pipware.com. This next session is moving on with the price action component part of my strategy, and today I'm going to introduce fractals and why we consider them quite important. First off though, the usual shameless self-promotion. I trade Forex making 2% a day, but my trading capital is not sufficient enough for me to live off that. Wish it was. If you find what I teach you useful, please consider purchasing the dashboard from my website, pipware.com, consider making a donation on the donate link on the site. Okay, back to the actual task at hand. Now, fractals. Why are we even going to consider them? Well, market does trend, but if you look at any time frame, you'll notice that, and it's quite amazing really that people don't really pick up on this, that if you enter a trade at any point and you're going for trying to make a reasonable profit out of it, let's say we see a trading opportunity, just say here, okay? So we enter a trade at this point. So we'll draw a line there. Now, very hard when you enter a trade, because even though you're going to get into profit, and we'll just go down into a lower time frame yet again so that we can see that just a wee bit better. Okay, so let's say we've drawn ourselves a line and we enter based on what I've just been teaching. Okay, so we enter the trade and we enter it, let's say, on a break just there. Now the trade goes into profit, and if I measure what the profit might have got to without coming back to break even, so it's gone up to 12 pips. Okay, now the fact is that even though it's gone 12 pips in profit, it then comes back to your break even point. Now in some cases it's worse than that. It may come back behind your break even point. So for instance, if you traded this opportunity here, you are going to get, your entry would have been somewhere around there. You would have gone this many pips in profit, 9 pips, and then you would have seen price retrace on you and get down to about 20 pips behind. So this trading game is pretty hard, because even though you can find optimum entries like this, good trading entries, I would consider that still a good trading entry. This is a good trading entry. We just remove that line. This here would be another good trading opportunity. We might just put that on an angle. They're all good trading opportunities, but at some point price will retrace, and you can't get past that. I mean, if you enter here, the ideal is that you entered here, right? Price is going to retrace on you. How much is it going to retrace on your entry? What's worst case here? 6 pips? 8.7 pips. That's good, but by the time it gets down to a few candles and starts showing a big red candle like this, some of you will be freaking out because it's going back against you this far, and you'll probably pull the trade, or you might, dare I say it, hold on, and it may even retrace a whole heap more, and you'll be out. Worst one is this one here. I mean, if you had have decided to enter right at this point here, on this candle right here, you're going to end up with price retracing on you 25 pips, and then shortly afterwards it's going to go ahead and make 33 pips profit way up here. So you were trading in the correct direction, but it just came back on you. So this is where you have to think a little bit differently about how price works. Price works in waves. It goes in up and down flows as it heads towards its destination. Okay? And you know, the waves that it moves in, like this, you've got to be able to try and catch it at the trough of the wave as best you can, and then ride the waves until your destination of where you want to get out. Now, the hard bit is trying to figure out where to get out, when, how far do you ride this thing. You've got this far, but then you get that first retracement coming back here, so you jump out based on just a small profit up to this point because you've got out on another trough rather than a peak, and then it continues on and makes higher highs there and higher lows, and you could have made a serious amount more profit. Now, I'm telling you something that you already know, and it happens to you all the time. So what we need to be doing is having a different way of thinking about the market and not view it as one continuous move up. We always have to consider it being peaks and troughs as it's getting there, but have the faith that using the moving averages as our guide as to what direction trend is going, that's going to help us. The other way that we can be helped by this is by adding fractals. Now, if we insert indicators and go to Bill Williams here and put fractals on, what the fractals do is they give us an idea of where the tops and bottoms are. And a fractal is made up of a 5-candle formation, and probably the easiest way is just to take something like this one. What you need is the middle candle out of the 5 candles has to be higher than the other 2 either side. So, and for a lower fractal, same thing. We've got a lower candle here. These 2 are either side like this. Now, we don't need to have, like in the case of this one here, we don't need to have like these 2, this is higher than this one and this one is higher than this one. In this case, this one is higher than this bottom, but this one is not higher than that bottom, but it is higher than the bottom of our middle candle. So that's how a fractal is formed. Now, it's not ideal in a sense, because I don't really like the fact that this one has drawn a fractal here, when really what I'm really interested in is I'm wanting to know when this peak here occurs, when this peak occurs, and when this one occurs, and then the next one down. So those are the most important ones, are the ones that we see at the extremities here. They are the ones that we're going to try and use to help us with our trading. So the general idea of a trend, and you can use fractals for this, is you are making, the price is making for an uptrend higher highs. So if these are showing highs, then higher highs and higher lows, we've got an uptrend. And conversely, if we've got lower highs and then lower lows, let me move to the side here, which it didn't quite happen here. So we got a lower high, we didn't get a lower low, so we can't really consider that the trend has been broken or reversed at this point. And then we've still got another higher low here. So in terms of using fractals, this is still considered an uptrend. It hasn't broken down to a downtrend. And in fact, then it made another higher high and a higher low. So fractals can be a little bit difficult to follow, because one would hope that you always get this kind of situation where you've got a higher low and a higher high, higher low, higher high. But then when you get this kind of thing, a lower high and a higher low, you're getting into an area of where trend's considered flat. And you have to start considering your trading a little bit more carefully as to where you're going to enter. The fact that we still keep getting higher lows here says to me that the uptrend hasn't stopped. And in fact, we would have our moving averages here to show us that fact. Now in the next videos, we're going to see how fractals can be used to enhance our entry and our exit. So have a look at fractals on all your time frames, and you'll get the idea of what I'm talking about. Sometimes it can be messy, but we'll filter all that out shortly.